December 15, 2024, while most investors were watching Bitcoin cross $100,000, something happened in a laboratory in South Korea that will reshape the entire commodity market. Samsung SDI, one of the world's largest battery manufacturers, just filed a patent that contains 3 words buried in the technical specifications. 3 words that Wall Street hasn't noticed yet. 3 words that make every silver chart you've ever studied completely obsolete. The patent describes their new solid-state battery technology. The media is excited about the 900-mile range and 9-minute charging times. Analysts are calling it the death of Tesla's battery dominance, but they're all missing the fine print. They're missing the single material specification that changes everything. Samsung's revolutionary battery doesn't run on lithium alone. It doesn't run on cobalt or nickel or graphite. The secret ingredient, the element that makes the entire system possible, is silver. And we're not talking about the tiny amounts used in circuit boards. We're talking about structural quantities. We're talking about grams per cell, kilograms per vehicle, hundreds of millions of ounces across the global fleet. This is the story of how a battery breakthrough in South Korea is about to trigger the biggest supply crisis in modern commodity history. This is the story of the Samsung silver bomb. And if you own even a single ounce of silver right now, everything is about to change. For 3 decades, the world has run on lithium-ion batteries. Your smartphone, your laptop, every Tesla on the road, they all use the same basic chemistry. Lithium ions move back and forth between 2 electrodes through a liquid electrolyte. It works. It's reliable, but it has one fatal and fixable flaw. When you charge a lithium battery quickly, or when you charge it thousands of times, something deadly starts to grow inside. They're called dendrites, microscopic needle-like crystals of lithium that grow like roots through the battery. They start at the anode and slowly pierce their way toward the cathode. Eventually, they breach the separator, the thin wall keeping the 2 electrodes apart. When that happens, you get a short circuit. The battery enters thermal runaway. Temperature spikes to 800 degrees in seconds. The car, the phone, the house, they all catch fire. This is why your electric vehicle takes 45 minutes to charge. Engineers have to charge slowly to prevent dendrite formation. This is why batteries degrade. After 5 years, the dendrites are slowly killing the cells. This is why every few months you see a headline about a Tesla burning in someone's driveway. The dendrites finally pierced through. The entire industry has been desperately searching for a solution. They've tried everything: graphite anodes, silicon anodes, ceramic separators, solid electrolytes. Toyota promised solid-state batteries in 2015, then 2018, then 2020. They all failed. Volkswagen invested billions. They failed. QuantumScape went public promising the breakthrough. Their stock crashed 90% because they couldn't solve the dendrite problem. Then Samsung's researchers found something that nobody expected. They discovered that one specific element, when layered at the nanoscale with carbon, completely stops dendrite formation. The lithium ions flow freely. The battery charges in minutes. But the dendrites can't grow. The element is so stable, so conductive, so perfect for this application that it seems almost designed by nature for this exact purpose. That element is silver. Samsung's solid-state battery uses a silver-carbon nanocomposite anode. This isn't theoretical. This isn't 5 years away. The patent is filed. The pilot production line is being built right now in South Korea. They're targeting mass production by late 2027. And here's what nobody in the financial media understands. This isn't like adding silver to a circuit board. This is silver as a structural component of energy storage. The silver isn't just conducting electricity. It's hosting the lithium ions. It's regulating the electrochemical reaction. You can't engineer it out. You can't substitute it. You can't reduce the amount without the dendrites coming back. The chemistry is absolute. Now, before I show you the numbers that will make your head spin, I need you to do something. If you've made it this far, if you're starting to understand what's coming, hit that subscribe button right now. This channel exists to expose the financial stories that mainstream media ignores, the stories that Wall Street doesn't want you to understand until it's too late. So subscribe, smash that bell icon so you never miss an upload, and drop a comment below telling me where you're watching from and what time it is in your part of the world. I want to see how global this community really is. Are you watching from New York at 8 a.m.? From London at 1 p.m.? From Singapore at 9 p.m.? Let me know. This information needs to spread before the banks and institutions buy up every ounce of silver on the planet. Let's talk about how much silver we're actually discussing here, right now. A normal gasoline car uses about 15 to 20 grams of silver. It's in the window defroster, the seat motors, the engine control unit, small amounts spread throughout. A current electric vehicle uses more, maybe 30 to 50 grams, because EVs have more complex electronics, more sensors, more high-voltage systems. That 30-gram increase is already stressing global supply. It's part of why we have an existing deficit of over 200 million ounces per year. But Samsung's solid-state battery changes everything. We're not talking about control systems anymore. We're talking about the battery pack itself, a 1,000-pound battery pack with hundreds of individual cells. Every single cell needs that silver carbon anode. The early technical papers from Samsung suggest they were using between 5 and 10 grams of silver per kilogram of anode material. Let's be extremely conservative. Let us assume they optimize the process and get it down to just 100 grams of silver per vehicle. That's double what current EVs use, but it's probably a low estimate. The global auto industry produces 90 million vehicles per year. Electric vehicles are currently about 15% of production, and that's growing fast. Let's say by 2030, 40% of all new cars are electric. That's 36 million EVs per year. If even half of those use Samsung's solid-state technology, that's 18 million vehicles. 18 million vehicles times 100 grams equals 1.8 million kilograms. That's 58 million ounces of new silver demand every single year, just from car batteries. But here's where it gets terrifying. 100 grams is probably fantasy. A Ford F-150 Lightning has a battery pack that weighs 1,800 pounds. A Hummer of battery weighs 2,900 pounds. If those vehicles switch to solid-state batteries with silver anodes, they could easily require 500 grams, maybe a full kilogram of silver per vehicle. If the real number is 300 grams per vehicle instead of 100, we're not talking about 58 million ounces. We're talking about 170 million ounces of new annual demand. That is more silver than the entire mining output of Mexico, the world's largest silver producer, and Mexico produced 190 million ounces last year. So this one technology, from one company, could consume the entire output of the world's biggest silver-producing nation. Where does that silver come from? Total global mine supply is about 830 million ounces per year. Industrial demand for electronics and solar panels already consume 650 million ounces. Jewelry and silverware take another 200 million. Investment demand, coins and bars, accounts for roughly 250 million. We're already in a deficit. The market is already drawing down inventories by 100 to 200 million ounces every year just to meet excess ting demand. Now at Samsung's 170 million ounces, the math doesn't work. There isn't enough silver on Earth being mined right now to support this transition. Something has to give. Either the price explodes to destroy demand in other sectors, or the mines massively expand production, or the solid-state battery revolution doesn't happen. But here's the trap. Governments around the world have legally mandated the end of internal combustion engines. California banned gas car sales after 2035. The European Union banned them after 2035. China is pushing aggressive EV quotas. The politicians have bet everything on electrification. They can't back down now. So if Samsung's battery is the only technology that delivers 900-mile range and 9-minute charging, governments will do anything to secure the silver supply. They will subsidize it. They will stockpile it, and if necessary, they will restrict civilian access to it. This is where silver stops being an investment metal and becomes a strategic resource. Think about oil in the 1970s. When OPEC cut supply, did the price of oil jewelry go up? No, the governments rationed it. They prioritized industrial and military use. I'm not saying this will definitely happen with silver, but the legal framework already exists. The Defense Production Act in the United States gives the president power to allocate critical materials for national security. If Samsung and Tesla tell the White House they can't build the EVs that Congress mandated because there's no silver, do you think the government says, okay, forget the green transition? No, they declare silver a critical strategic material and they prioritize its allocation. Now let's talk about what the market is doing right now, as of this week. Silver is trading around $31 per ounce. It's up about 30% this year, which sounds impressive until you understand what's coming. The financial analysts covering silver are still using old models. They're projecting demand growth of 2–3% per year. Steady, linear, predictable. They're factoring in solar panel growth. 5. Infrastructure. Maybe a little extra for EVs, but they're modeling silver as a precious metal with some industrial uses. They have no idea that it's about to become a critical input for the entire transportation sector. This is what happened with palladium in the early 2000s. The auto industry quietly switched from platinum to palladium in catalytic converters because palladium worked better for gasoline engines. Nobody noticed at first. Palladium was trading at $200 an ounce. Financial analysts barely covered it. Then demand exploded. Suddenly every car on Earth needed palladium, and there wasn't enough. The price went vertical. Palladium hit $3,000 an ounce. It happened so fast that car companies had no time to adjust. They were locked into the chemistry. They couldn't substitute. They had to pay whatever the market demanded. We're watching the exact same setup with silver, but the scale is 10 times larger. Samsung isn't a small company experimenting in a lab. Samsung is one of the largest electronics manufacturers on the planet. They supply batteries to dozens of automakers. When they commit to a technology, the entire industry follows. If Samsung's solid-state battery becomes the standard, every car company will be forced to adopt it or fall behind. And every single one of them will need silver. Toyota, Volkswagen, Ford, GM, BMW, Mercedes, they'll all be competing for the same limited supply of metal. This is going to create a bidding war unlike anything the commodity markets have ever seen. And here's the part that should keep mining executives awake at night. You can't just dig up more silver instantly. It takes 10 to 15 years to bring a new mine from discovery to production. You need to find the deposit, drill it, prove the reserves, get permits, raise capital, build the infrastructure, and start digging. If we found a world-class silver deposit tomorrow, it wouldn't produce a single ounce until 2038. But Samsung needs the silver by 2027. Tesla needs it by 2028. The timeline is completely mismatched. The only silver available is what's being mined right now, and that supply is basically flat. In fact, ore grades are declining. 20 years ago, a good silver mine produced 15 ounces per ton of ore. Today, a good mine produces 4 ounces per ton. We have to move 4 times as much rock to get the same amount of silver. That means higher costs, more diesel fuel, more water, more labor. The easy silver has already been mined. And let's talk about geopolitics, because this is where it gets really dangerous. Mexico produces 25% of the world's silver. Peru produces 18%. China produces 12%. Russia produces 6%. If you're sitting in Washington or Brussels, and you realize that your entire green energy future depends on silver, and most of that silver comes from countries that might not be friendly in 10 years, what do? You panic. You start securing domestic supply. You ban exports. You stockpile. We're already seeing the beginning of this. The United States passed the Inflation Reduction Act, which requires battery materials to be sourced from friendly nations to qualify for EV tax credits. If a car company buys silver from Russia, no tax credit. If they buy from a mine in Nevada, they get the credit. This creates a two-tier market. There's cheap silver from geopolitically risky countries, and expensive silver from safe countries. And guess which one Samsung is going to buy? Now, I need to explain why the current price of silver is completely disconnected from reality. Silver trades primarily on the COMEX in New York. The COMEX is a paper market. It is a futures exchange where banks and hedge funds trade contracts representing silver without ever touching physical metal on an average day. The COMEX trades 300 million ounces of paper silver, but there are only about 50 million ounces of actual registered silver in COMEX vaults. That means the paper market is leveraged 6-1 against physical reality. This works fine when everyone's playing the paper game, but what happens when Samsung shows up and says we don't want a contract, we want the metal? The whole system breaks. We're already seeing the cracks. In the last 6 months, COMEX registered silver inventories have fallen by 40%. The metal is being drained out of the exchange. At the same time, premiums on physical silver coins and bars have exploded. You can see silver quoted at $31 on the futures screen, but when you try to buy a silver eagle from a dealer, you are paying $37 or $38. That $6 premium is the market screaming that paper and physical are diverging. When Samsung's procurement officers start calling refineries to lock in multi-year supply contracts, that divergence is going to turn into a chasm. Here's what I think happens over the next 3 years. Phase 1 is already underway. It's the quiet accumulation phase. Samsung, Toyota, and other battery makers are right now, today, signing confidential supply agreements with mining companies. They're not announcing it. They're not bidding up the spot price. They're locking in silver at $30 or $35 for delivery in 2027 and 2028. The miners are happy because it is higher than the current price. But the miners have no idea they just sold at a 70% discount to where the market will be. Phase 2 begins when the first mass market solid state F hits the showroom. Let's say it's late 2027. Samsung announces their battery is in production. Toyota launches a car with 850-mile range and 10-minute charging. The reviews are incredible. Every other automaker panics. They realize they're about to be obsolete. They all call their battery suppliers and say we need solid state now. The suppliers say we need silver. And suddenly, 15 different car companies are competing for supply that doesn't exist. That's when Phase 3 hits. The spot price of silver explodes. It goes from $31 to $50 in a month, then $50 to $80. Not because of inflation. Not because of currency collapse, because of raw physical demand from industry. At $80, jewelry demand gets destroyed. Nobody's buying silver forks anymore. At $100, some industrial uses get substituted out, but the car companies can't substitute. The chemistry doesn't work without silver, so they keep buying. They have no choice. Their factories are built. Their production lines are running. They need the metal or their billion-dollar investments are worthless. This is inelastic demand. This is what drives prices into the stratosphere. Now, let me tell you what the skeptics are going to say. They're going to say recycling will save us. We'll just recycle the silver from old batteries. This is the recycling myth. And it's dangerous because it gives people false comfort. Yes, eventually, silver from solid-state batteries will be recycled. But when a car battery lasts 15 years, the silver that goes into a 2027 Samsung battery won't be available for recycling until 2042. We have a supply crisis now. Recycling doesn't help for 15 years. And even then, recycling rates for silver are terrible. Gold is recycled at 90% because it's concentrated in jewelry and bars. Silver is recycled at less than 30% because it's dispersed. There's 0.1 grams in your phone, 0.3 grams in your laptop, a thin film in a solar panel. It costs more money to extract that silver than the silver is worth, so it goes to the landfill. We are literally burying billions of ounces of silver back into the earth in a form that is impossible to recover. The other argument you'll hear is they'll just engineer the silver out of the battery. This assumes chemistry is negotiable. It's not. Samsung didn't choose silver because it was cheap or convenient. They chose it because it's the only element that works. They tested dozens of materials. Graphite failed. Silicon failed. Lithium metal failed. Silver succeeded. If you remove the silver, the dendrites come back. If the dendrites come back, the battery catches fire. Would you buy an electric car if you knew it had a 5% chance of burning down your house? No. So the car companies are trapped. They can't thrift the silver out without sacrificing safety. And safety isn't negotiable. One viral video of a solid-state battery fire would destroy the entire market overnight. So here we are. Samsung has built the better battery, the battery that everyone's been waiting for. The battery that makes EVs better than gas cars in every way. And the battery has a silver addiction that can't be cured. The automakers are committed. Governments are committed. Billions of dollars of factory investment is committed. The only thing that's not committed is you. The price right now, around $31, is the last moment of ignorance. It's the brief window where the Samsung silver bomb has detonated in the laboratory, but the shock wave hasn't reached the markets yet. The engineers know. The procurement teams know. But the financial analysts are still reading reports from 2023 that say silver is a sleepy precious metal with modest industrial demand. You're not going to get a clearer signal than this. When the news fully breaks, when the first Samsung battery goes into mass production, when the car companies start publishing their silver requirements, the price will already be gone. You'll be watching silver at $75 wondering why you didn't buy at $31. So what do you do? If you're thinking about buying silver, stop thinking. Physical metal is the play, not silver stocks. Not silver ETFs, not silver futures, physical coins and bars that you hold yourself. Why? Because when the shortage hits, when industrial buyers are desperate, the paper markets will break. ETFs will suspend redemptions. The COMEX will raise margin requirements to kill leverage. But if you hold a 100-ounce silver bar in your hand, nobody can margin call you. Nobody can suspend your redemption. You own atoms of metal that Samsung needs. I'm not saying this will happen overnight. The solid-state revolution will take 3 to 5 years to fully deploy. But the price doesn't wait for deployment. The price moves when the smart money realizes what's coming. And the smart money is starting to move now. I want you to think about this. Samsung's secret weapon isn't the battery itself. Samsung's secret weapon is that they solve the battery problem using an element that almost nobody owns, that most investors ignore, and that the global supply chain is completely unprepared to provide at scale. They've created a dependency on a substance that's rarer than gold, more useful than platinum, and currently priced like it's a decorative metal for grandma's tea set. The silver market is about to break, not because of manipulation, not because of conspiracy, because physics and chemistry don't care about futures contracts. Samsung's battery works. And it works because of silver. That's not a narrative. That's not a theory. That's just the periodic table. And you can't print elements. You can't negotiate with electrons. The only question left is whether you position yourself ahead of the wave or you watch it go by. Samsung's secret weapon will break the silver market forever. Make sure you're on the right side when it does. If this video just changed how you see the next 5 years, do me a favor, share it. Send it to someone who owns silver, someone who's thinking about buying silver, or someone who thinks silver is just a boomer metal that doesn't matter anymore. This story is too important to stay buried in the algorithm. The mainstream media won't cover this until it's too late, so it's on us to spread the information. Subscribe if you haven't already, hit the bell, and I'll see you in the next one where we break down exactly which mining companies are positioned to explode when this shortage goes mainstream. The Samsung bomb is live. The clock is ticking.